Reserve for an expiry is 50% of the premium. 2,50,000, 3,30,000. It works out 6,90,000, 12,30,000. In the examination, if they ask the profit and loss account, then only you have to do this. Legal expenses regarding the claim, they say 6,000. That should be added. It becomes 3,06,000. Hello, my dear students. I am Dr. B.S. Subramania, called by name Dr. BSS, Professor in Commerce and Management, Vidhyaashram, First Grade College, a Temple of Excellence, Mysuru. Today, I am going to have session 2 of 4 semester unit 1, Corporate Accounting 2, in favor of BCom, goes in favor of the chapter called Accounting for General Insurance Company. So, if you go for the last session, we already solved the format and the revenue account, how the revenue account format is there. So, how the revenue account format goes: schedule number 1, premium; schedule number 2, claims; schedule number 3, commission; schedule number 4, operating expenses, which is the income. Premium, schedule number 1 is the income. The expenses are claims paid, then commission, next operating expenses, add the 3, whatever the difference comes, that's the operating profit. So in the schedule number 1, what is premium? Whatever the amount the customer is going to pay for insurance company, this general insurance will be made for only 1 year. If the 1 year is over, you have to once again you have to renew for the second year is considered. So it is not a continuous one, it is only for 1 year. So premium minus reinsurance premium, add outstanding premium of the current year, premium of the last year, add opening reserve for unexpired should be added, opening additional reserve should be added, minus reserve for unexpired risk at the end of the year should be deducted, minus additional reserve should be deducted. So premium minus reinsurance premium, add outstanding premium of the current year, premium of the last year, minus additional reserve at the end of the year, minus reserve for unexpired risk at the end of the year, that should be deducted. So about regarding the fire and accident, you have to keep aside 50% of the net premium. In case of marine, it is 100%. So if you are doing the problem in case of accident and fire, you have to keep aside about 50% of the net premium. In case of marine, you have to keep about 100%. So these are the items you have got. One is the premium, one is the claim, one is the commission, one is the operating expenses. In the last session, if you go back to the last session also, we already solved one problem and I explained the format also. Today, we'll go to a second and third problem, and the same type of problem they are going to ask you about the 10 marks is considered. Very, very easy problem they are going to ask. So you must be perfect with the format. Now, I will explain the problem now. The following are the ledger balances of General Insurance Company as on 31st December 2017. Insurance fund on 1/1/17 in beginning of the year, fire, accident, beginning of the year should be added. This is commission paid in case of fire, in case of accident. How to do particular fire and accident you have to write. Then it's an expenditure. So it will come in the what's called schedule number 3. Insurance fund, it will come under the premium schedule number 1. Then salaries, it won't come. It will go to profit loss account. Share transfer fees, management expenses. So in case of management expenses, that is nothing but operating expenses, schedule number 4. In case of fire, in case of accident, claims paid. So it will come in schedule number 3, fire and accident, auditor fees, P&L account, director fees, P&L account, interest and dividend received, tax paid on the above, printing and stationery, depreciation. So premium received, fire accident. So adjustment, management expenses outstanding, they should be added to. Management expenses, accident 5,000, they should be added to. Fire, reserve for unexpired is 50% of the premium received in each case. Prepare revenue account and general profit loss account for the period ended 31st December 2017, they asked. So you have to prepare general account period. Then we'll go to problem now. Whatever the premium received is 5 lakh and 6,60,000. See that? What's your premium received? Insurance fund, come back here. Auditor fees, fire insurance, commission, salary, share transfer fees, accident, claims, auditor fees, How much premium received? Fire is 5 lakh. Accident is 6 lakh 60,000. 5 lakh 6 lakh 60,000. Add outstanding received fund. Fund at the beginning should be added. 4 lakh 40,000, 9 lakh. 4 lakh 40,000. If you add this, no, it becomes 9 lakh 40,000, 15 lakh 60,000. At the end of the year, you have to deduct 50% of 5 lakh. 2 lakh 50,000. 50% of 6 lakh 60,000 is 3 lakh 30,000. Difference 6 lakh 90,000. 12 lakh 30,000. I will repeat. The premium received is 5 lakh in case of fire, 6 lakh in accident. Outstanding received fund 4 lakh 40,000. They should be added 9 lakh. It becomes 9 lakh 40,000, 15 lakh 60,000. This is 9 lakh. Reserve for an expiry is 50% of the premium, 2 lakh 50,000, 3 lakh 30,000. It works out 6 lakh 90,000, 12 lakh 30,000. Schedule number 2, claims paid. If you see that, what are the claims paid? Fire 70,000, accident 64,000. Claims 70,000, accident 64,000. Then particular commission, fire 10,000, accident 16,000. See that? Come back here. Claims here, insurance, commission, fire 10,000, accident 16,000. 10,000, 16,000. Operating expenses. Yes, see that? What's your operating expense? Management expenses, fire 50,000, accident 60,000. Then there is an outstanding here. How much outstanding? 8,000. This is fire, this is accident. 50 plus 8, 50,000. So that should be put into a format. So revenue account says no. This is general insurance revenue account. Schedule number 1, premium. In case of fire, it is 6 lakh 90,000. This is accident 12 lakh 30,000. This is A. Then commission paid 70,000, 64,000. This is claims paid. Then commission paid 10,000, 16,000. Then operating expenses 4,000, 58,000, 65,000. The total expenditure comes 1 lakh 38,000. Here it comes 1 lakh 45,000. This is the B. This is the A. This is the B. A minus B, 6 lakh 90,000, 1 lakh 30,000, it comes to 5 lakh 52,000, it comes to 10 lakh 85,000. If they ask only revenue account, it will stop here. Somebody asked a profit and loss account, so we can pull on to that one. So I will repeat once again how the problem goes. Now, first premium received 5 lakh, 6 lakh 60,000. So fund, what's called, what was the fund available at the beginning, that should be added. 4 lakh 40, 9 lakh 40,000, 15 lakh 60,000. So you have to keep aside 50% of the net premium. 50% of 5 lakh is 2 lakh 50. For 3 lakh 30,000. The balance available is 6 lakh 90,000 and 12 lakh 30,000. Regarding the schedule number 2, claims paid 70,000, 64,000. There is no adjustment at all. Commission 10,000, 16,000. Operating expenses mean management expenses. This is operating means management expenses. Management expenses 50,000, 60,000. Outstanding 8,000, 5,000, 58,000, 65,000. So put it in format. Premium 1, 6 lakh 90,000, 12 lakh 30,000. This is the receiving entry. We received say income. The expenditures are 1 lakh 38,000, 1 lakh 45,000. So 5 lakh 52,000, 10 lakh 85,000. Then if you prepare the profit and loss account up to tax, no, you can do that one. Another way also there. Profit and loss account, revenue profit, 5. See that? 5 lakh 50,000, 10 lakh 85,000. It means 16 lakh 30,000 minus, when only they ask for revenue profit, you have to do like this. Then interest and dividend received. Interest and dividend 1 lakh 50,000. Add this 17 lakh 87 minus tax paid 50,000. If any more expenditure is there, that goes to another way. 17 lakh 87,000 minus tax paid 50,000. 17 lakh 87,000 minus 50,000. So 17 lakh 37,000. This is my. Any expenditure is there. See that? Any expenditure. Auditor fees 10,000, director fees 10,000 minus auditor fees 10,000 minus director fees 10,000. So this over, interest and dividend over, tax and then printing and stationery minus printing and stationery. Another expenditure, printing and stationery 20,000 minus depreciation 24,000. Add this. So this is 10 plus 10, 20, 24, 44, 64,000. Deduct 17,37,000 minus 64,000, 16,73,000. This is the net profit. So here, if you want, you can continue that like the profit for the year, revenue, profit 5,50,000 to accident 6,00,000 minus interest and dividend 1,50,000 should be added. It becomes 17,80,000 minus tax paid 50,000. That should be deducted. Any transfer fees is there. Here, salary, share transfer fees is also there. Here, salary 1,60,000, share transfer fees 4,000, gross net profit minus salaries 1,60,000 plus share transfer fees, we say income, share transfer fees 4,000 plus add this 16,73,000 plus 4,000 minus 1,60,000, 15,17,000. This is the gross net profit. So net profit is equal to 15,17,000. So the total profit is 16,37,000. Add interest and dividend 1,50,000 minus tax paid 50,000. It becomes 17,37,000 minus auditor fees, minus director fees, minus printing, minus depreciation 64 deducted. It's called the gross net profit. Minus salary should be deducted. Share transfer fees should be added. So net profit will work out 15,17,000. In the examination, if they ask the profit and loss account, then only you have to do this. Unless only revenue account 10 marks. Here, this all goes to profit and loss account. Profit of the 5, profit of the accident, interest and dividend received, minus tax paid, auditor fees and expenditure, director fees and expenditure, printing is an expenditure, depreciation is also an expenditure, 64,000 deduct. Then salaries and expenditure, transfer fees income. If you add and deduct, now it will come 15,17,000 is the net profit. That is 16,73,000 minus 1,60,000 plus 4,000. 16,73,000, 1673 followed by 30 minus 160 followed by 30 plus 4,000. 15,17,000 is the net profit. If they ask only profit and loss account, if they ask the revenue account, it will stop here only. It's only stop here. So we'll move on to next problem. From the following particular, prepare 5 revenue account only. They are not asked the profit and loss account. Claims paid. So claims will come under schedule number 1. Schedule number 2 is the claims paid. Claims paid on month 4 is the last year, that should be deducted. claims paid of the current year, that should be added. Legal expense regarding the claims, that should be added. Premium received will come schedule number 1. Reinsurance premium should be deducted. Commission paid schedule number 3. Expense of management, operating expenses. Provision against unexpected at the beginning of the year should be added. So a small problem was asked here. Very small problem. Say 10 marks. This is also here. 10 marks. So we'll repeat. So the schedules are premium schedule number 1, claims schedule number 2, commission schedule number 3, operating expenses schedule number 4. So you must pay. So what's the last is premium minus reinsurance premium. Add opening reserve for unexpected risk should be added. Opening additional should be added. Minus reserve for unexpected risk at the end should be deducted. Minus closing additional reserve should be deducted. Second one, claim. Add outstanding claim of the current year should be added. Claim of the last year should be deducted. Commission paid. If there is a ceded is there, they should be deducted. Accepted is there, they should be added. Regarding the current. Operating means management expenses. If there is any management expense, the should outstanding should be added of the current year. Last year should be deducted. Here, claims paid is 2,82,000. That will come in the schedule number 2. Claims unpaid of the last year should be deducted. Claims paid of the current year should be added. Legal expense regarding the claims they ask, so it will be added. Premium received schedule number 1. Reinsurance premium should be deducted. Commission will come schedule number 3. Expense of management schedule number 4. Provision unexpected regarding the premium is considered. So this is at the beginning of the year, that should be added. End of the year should be deducted. We'll go to problem now. Premium received 7,20,000 minus reinsurance premium should be deducted 72,000. It comes to 6,48,000. Add reserve for unexpected risk. This is 3,12,000 should be added. Less reserve for unexpected at the end of the year 50% of the premium. 6,48,000, 3,24,000, that should be deducted. So balance is 6,36,000 is a net premium. Second one, claims paid 2,82,000. Add claims outstanding at the end of the year 42,000, that should be added. Less claims of the last year 1,4 is 24,000 should be deducted. It's a 3 lakh. Legal expenses regarding the claim they say 6,000, that should be added. It becomes 3,06,000. Commission paid 1,20,000. Put into format now. Premium received 1 is 6,36,000. Total claims in commission 2, 3,06,000. Operating expenses here. Claims 3,06,000. Then commission 3, 1,20,000. Operating expenses 4, 1,80,000. This only a income. These are all the expenditure. So totally here the total of the B 6,06,000. It is 6,36,000. 6,06,000 should be deducted. This is what's the difference is 30,000. That is the operating profit. This goes to B. This goes to A. So operating profit is A minus B. It is 30,000 is the B. Very easy problem they ask. No tough is there. Only items you have to learn is only a format. Which the format you have to learn is very careful. So what the format says now. So we are doing the general insurance. There is a difference between general insurance and life insurance. I told in the last session also. General insurance will be made for only 1 year. Whereas a life insurance will be made for a number of years. Made on a particular purpose. Maybe accident. Maybe fire. But not on the life. But life insurance is made on the life only. If nothing happens, accident is not happen, fire is not happen, no money will be paid. But in the case of life insurance, you have been made in insurance for 30 years or 25 years. Once 25 years over, naturally you'll pay back your amount with the premium amount plus bonus will be given. By chance something happen, if the particular customer die, money will be paid to their nominees. But in case of general insurance, it is not so. If the particular event should be happen, then we. But bonus will be given in the life insurance. No bonus will be given in the general insurance is considered. So what is the format? You have to prepare the revenue account. How the revenue account is paid? Schedule number 1, premium. Schedule number 2, claims. Schedule number 3, commission. Schedule number 4, operating expenses. I will repeat. With are the 4 schedules are: one is the premium, schedule number 1, claims, schedule number 2, commission, schedule number 3, operating expenses, schedule number 4. So how the premium adjustment will go? Premium received minus reinsurance premium, add additional premium at the beginning of the year, add reserve for unexpected at the beginning of the year, minus closing reserve at the end of the year should be deducted, minus closing additional reserve should be deducted. Regarding the claim, add outstanding claim of the current year, minus claim of the last year should be deducted. Any legal expense regarding the claim is there, they should be added. Regarding the commission paid, minus commission ceded should be deducted, accepted should be added. Regarding the management expense, any connected to management expenses, it may be management expenses also, legal expense also, any connected to management expense should be taken. If they ask in the examination profit and loss account, then we have to prepare. See that? Here generally they will stop it here. If they ask, here you have to pay profit, the 17 lakh, that's how the expenditure net profit, minus salary should be deducted, transfer fees, net profit is 15 lakh, 17,000, that you have to work out. If they ask, here if they ask only revenue, very simple problem they ask in the examination, claims paid, which schedule generally come? Claims paid in the schedule number 2. Beginning of the year, what I told, that should be deducted, current year should be added, regarding the claim they say, that should be added, premium received, schedule number 1, reinsurance premium should be deducted, commission, schedule number 3, expense of management, schedule number 4, unexpressed at the beginning of the year should be added. That's what we have done. See that? Premium received, net premium, less reserve for unexpected risk at the beginning of the year added, less reserve for at the end of the year should be deducted, premium received, commission paid, claims paid, add closing claims of unpaid, minus previous year outstanding claim, legal expenses, commission, premium received, total here. So we have solved about the 2 problems, and once already solved in the last session 1 problem with the format. I have solved about the 2 problems regarding the revenue account. We'll have another 2 problems in the next session, same type of problem. So that 10 marks question will go, then we'll go with the balance sheet. I hope you understand this. Very simple. Only 4 items are there. One is the premium, one is the claim, one is the commission, one is the operating expenses. Only revenue account will be asked. Very, very simple problem in asked. Hope you understand that. Till then, goodbye. Meet in the next class.